And so then you can see what happens. You've got supply that comes in because everyone's saying, oh man, look, this is hitting really high resistance. And then what's really fascinating about this is notice where we pull back. We pull back to the 2.618 area, which is also this previous area of resistance, which is now acting as support.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Today's episode is produced in partnership with TrendSpider. Get scanning, charts, backtesting, and alerts all in one place with TrendSpider. Go to trendspider.10MinuteStockTrader.com to get an exclusive discount code and bonuses worth over $100 when you take your free trial at trendspider.10MinuteStockTrader.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week.
Hey everybody, this is Jake with TrendSpider, and we are going to go over another video in the technical analysis series on Fibonacci levels. Fibonacci levels are something that there's a lot of information on. I'm not going to dive deep into that. What I'm going to dive deeper into is the 0.618 extension or retracement, depending on which way you're measuring the measured move. So what I'm going to do is go over a few different charts and show you where price action has really respected these levels. Now, the 0.618 is really the most important level in the Fibonacci sequence. From what I've learned from Tarek Saab, who started Fibonacci.com, he has all of the information on Fibonacci levels, the history of it. So if you do want to check out that, I would just recommend going to Fibonacci.com. But today's video is really going to focus on the 0.618 extension, especially on a measured move such as IBIO, that you can see here was huge. We moved down from 57 cents to 4 cents. And what I did here, because this is a huge move that really changed the status quo here, I initially measured the move here, which is A to B. And then what you can see is these extensions that come out that I've highlighted here. And so you can see here that the price has really respected two important Fibonacci levels here. It's respected the 6.618 extension, which is just a huge extension for price to respect, but at the same time, it happens all the time. Now, what also happens is confluence. Confluence is when you have, let's say, a particular level like the 6.618, but what you also have is a previous area of resistance. So notice here, look at how far back we have to scroll to find that this 6.618 area really was in perfect alignment with this previous area of resistance in March of 2018. So one thing that I like to do is look for these areas of confluence between an extension and a previous level of support or resistance, because at that point you're getting not just someone who's trading fibs, you're also getting someone who's just trading basic support and resistance horizontal levels. And so then you can see what happens. You've got supply that comes in because everyone's saying, oh man, look, this is hitting really high resistance. And then what's really fascinating about this is notice where we pull back. We pull back to the 2.618 area, which is also this previous area of resistance, which is now acting as support. Notice how the price really just gapped right over it and now is pulling right back to this area and catching a bid. So these areas are not, exact. You can easily have some margin of error around these, just like any other trend line. So what's really nice about this is using this with an alert or anything like that on a Fibonacci level, which you can simply do by just right-clicking, creating an alert. And then the really important thing here is increasing or decreasing your sensitivity. Sometimes, let's say you want a margin of error of around 20 cents. Notice as I move this, the alert is going to fire within 20 cents now of this selected fib level. So that's something that's really powerful and gives you the ability to look for some of these areas that aren't necessarily going to precisely hit. Moving on to VIX. This is a really cool example of the VIX respecting these Fibonacci levels in the recent move up. Notice that you can see here A and B. A is where I started the fib, B is where I ended it, and then the 1.618 and the 2.618 are the two levels above that are extensions. Notice here, when we first broke out of this recent top, we did pull back and retest this. We then broke right through the 1.618 and then tested the 2.618 almost perfectly. The 2.618 was around 46.50. We topped out around 49. When you're in that type of environment in the market, you're not going to have exact levels hit. There's just too much emotion. There's too much volatility for these to be exact. However, notice how perfectly the price is now respecting the 1.618 level below. Very similar to what we just had in IBIO in the previous example, but just different extensions here. But they are all 0.618 extensions. So these areas hold for a number of reasons. One, Fibonacci really just happens across the board in nature in different ways that humans act to things. I mean, it's everywhere. And I used to think, okay, whatever. But it's actually crazy how much this is the case. However, people also are watching these levels because they know that they are levels that people watch. So they end up becoming self-fulfilling. So, especially on something like VIX where a lot of the pros are playing, they're looking at fib levels. They're looking at these areas to hold. And that's really what kind of will make the market. Fib levels are not an end-all be-all. They're not going to tell you everything, but they are good areas, especially to look at when you've got a big move up in price and you're really not sure where to look next. SPCE is a good example of this. Notice here, we IPO'd on October 28th of 2019. And then what I did here was I measured the move from November 11th down to November 25th. And you can see really nicely, we started here, we ended here, and then here are our extensions above. Notice when we first broke out, we really had some trouble breaking through this 3.618 area. We tested it multiple times but could not break through. And then finally, once we did, we literally moved straight up to the 9.618 resistance. Once again, they're not going to be perfect, but notice how we did close and open right around this general area. We did wick a little bit above, but overall the price did respect this area multiple times. Notice how we opened here. If we would have just created an alert at this line and then increased the sensitivity, we would have been able to capture this move when the price opened here. We would have also captured this move here and this move here. So this is something that gives you the ability to be flexible within the TrendSpider system. Now notice when we did pull back, we retested this 3.618 support area, which was previous resistance. So these levels are just incredibly powerful. This can be really applied to any time frame. This is an example that I initially learned from Tarek. I think that was way before we got to this area. But even before that, he was showing me on this chart on Microsoft how well the measured move was shown here. You've got A, which starts in 2007. You've got B, which ends in March 2009, which was the big move from the financial crisis. And so what you can see from that is when we did break out here, notice the 1.618 was your initial resistance. When we finally broke out, it became support. And then you just pretty much went straight up to test the 3.618 before we found some resistance, moved straight up to the 4.618, pulled right back here to the 3.618, and then went straight to the 7.618 above before really taking a huge move to the downside from around 190 all the way down to 150 within a week. So one thing that's really cool about this particular example is the fact that there was nothing for us to really predict price up here. Like, why did the price find resistance here? There was no trend line. We never had even been close to this price in the past. And so this is a great example of those extensions, especially the 0.618 extension, really showing these levels for you.
I've written a short guide on how you can use the Triple Stock Profit system. It's the secret weapon every investor needs right now to change your financial future. And you can get it for free by visiting triplestockprofits.com or in the links below. Also, if you want to join a community of traders just like you can get free access to the elite membership that has even more resources to help you trade faster and trade smarter.
Hopefully this video helped. This is something that I really have not used a ton in the past. I recently just started using it in the last year or so. And a lot of the reason is because of the teachings from Tarek and a few other of our partners that really understand fib levels a lot.
Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.